Welcome back, traders, to another episode of the Refined Q&A podcast, where we talk everything no-nonsense Forex plus more, coming to you each and every weekend. My name is Dillon, and I am, of course, joined here by Judge. Now, today's episode is one that I have been looking forward to for quite a little bit, and that is talking about, does your no-nonsense Forex trading strategy actually make sense? Are you testing it the right way? So this episode is going to be a fun one, and you've probably picked it up. We are going to actually be talking about the build order and how to develop your no-nonsense Forex trading strategy, and then, of course, test it. Now, this is a very, very important topic because we feel that a lot of people tend to get this wrong. And the thing is, when it comes to actually developing a trading strategy, you need to understand the methodology and understand what you're actually trying to do, not only from a trading strategy perspective, but also a trading testing perspective. Now, this is where it is very, very important to actually understand whether your trading strategy actually makes sense. And that making sense is something that we go into a lot of detail in this episode, because what does it mean by something to make sense? So we do talk about this a lot, and it goes back to what we've been talking about for quite some time, and that is the quantitative versus qualitative approach to trading. And as I mentioned, we also go into detail on testing. Now, because we are talking about adding different pieces of your algorithm together, we need to discuss what is the appropriate ways to back testing. And that's where we introduce the No Nonsense Forex Benchmark 5, which I suppose is our first time talking about the actual methodology of back testing for this particular podcast. Now, one more thing that I just want to mention is that for next week's episode, we are going to be talking about how to find a baseline that actually works. Now, baseline is also another tricky indicator that a lot of people in the past have struggled with, and we are going to, of course, be going into a lot of detail discussing what is the baseline and how to actually find one that works. So, of course, if you've got any questions regarding the baseline, or if you've struggled with trying to find a baseline, it would be good to see some of your questions coming in via the Discord or, of course, via YouTube. So finally, I just want to mention that now that we have gone through some of the indicators, I think we are now at a stage to start discussing how to test them. So it does break up the content of the actual algorithm development for this podcast. With that being said, we know that often the indicator talk is very, very sexy. However, in our opinion, what really defines the good traders from the not so good traders is exactly podcast episodes like this, talking about testing methodologies and talking about how to develop the trading strategy. This comes first over the actual indicators that you use. So, of course, we hope you enjoy this episode of the podcast, and so let's get straight into it. I hope that gives a little bit of an insight of what we're going to be talking today. But first, Judge, did you want to talk about your trading for the week?
Yeah, not too much happening. That is it. No, I mean, obviously there was not much happening. I still took signals. Obviously, you take signals, you do what your algorithm says. I think I had a couple of continuation-y type signals, but all in all, EVZ was sort of just hovering. I think it dropped down a bit, then dropped up, and then dropped down. And to be honest, there was nothing really much from a news perspective. So there was nothing really to move the market in that respect. There was a bit of volume spike towards the end. I think that may have been more caused, and I mean, this is me hypothesizing, obviously, but I think that was caused a little bit by the ceasefire in Israel and the Middle East. So, obviously things like that, which are those outlier events, can still, I suppose, inject volatility into the market. So your volume indicators can tend to get a little bit jumpy due to it, and you can get a couple of signals. But other than that, it's been pretty dead. Yeah, nothing really much more to comment on.
I have to say the exact same thing. I actually had 0 signals this week, so I did not take a trade at all. My C1 was doing a little bit of something there, but because there was no volume, I was actually out of a lot of trades there. So I actually took no signals, and that's just how my algorithm was. It wasn't like I wasn't trading the algorithm. Just for my particular algorithm, there wasn't any signals to be trading, and that's completely fine. I am still in a couple of continuation trades. I shouldn't say continuation trades specifically, but you know, I'm still trailing my stops up, so I managed to trail a couple of them up, and I think that's been really good. It's kind of if I'm in some trades, it's kind of a market that I do, you know, tend to like. I can sit back, relax, not have to worry, and the trades that I am currently in have been slowly going in the trend direction of my favor. So it's been a very comfortable ride, just trailing those ones up, which I have done a couple days this week, which has been really good. So making new highs and slowly trailing that up. So it's been a bit of a slow week, but you know, more or less one that I'm okay with. So nothing much more else to say.
What is that there, man? He's still in it.
It's the Swiss yen. I've been in that for, I think it's literally been 4 months. 4 months. No, sorry, 4 weeks. Sorry, no, not 4. Sorry, my mistake. 4. I wish.
4 months.
Yeah, my mistake. No, 4. Sorry, 4 weeks. So I've been in that one for a little bit. I think I mentioned it like very way back in one of the first episodes. So, well,
and
yeah,
it's still going.
It's still going. It's slowly going up. So
is it actually trending though, or are you just
it's trending?
Like a bad smell.
No, it's trending. It's I've been trailing it up. I've trailed it up. That and another pair. I forgot which pair it was, but that's only been there for a week or so. But I've been trailing that one up, so it's it's not doing too bad.
That's okay then, I suppose.
Can't complain.
My algo's too fast. I didn't even notice it. I should probably go back and have a look, actually.
Nah, one of those ones. So I do like them. So anyway, got nothing more. Yeah, got nothing more to say about this week. It's been that quiet. So today's episode, of course, we are going to be talking about our algorithm building order. So I just want to give a little bit of a flavor and just to give a little bit of context before we get into it a bit. In this episode, I want you to all think about this basic premise, and that is our strategy. So when developing a strategy, of course, we need to find something that kind of makes sense. Now, what is, you know, making sense of a trading strategy? And that's what's very important. Now, there's a basic premise for a trading strategy, and every single trading strategy has an entry, an exit, and money management. And that is the basic principle, I suppose, of every trading strategy. When you enter, when you exit, and what's the money management that you're using. So if you ever get stuck on something, particularly when you're building an algorithm and you're putting all these parts to it, make sure that you're ticking these boxes. Make sure that you've got a good entry. I shouldn't say a good entry, a entry and exit. And then, you know, if you're further in your development, have money management. And always go back to that basic premise and those basic principles. Because what's important is, does your trading strategy make sense? And are you building from a good foundation? So I just wanted to start off with that, and just want to, as we move on, just remember those key things. Does it make sense? So, Judge,
what do you mean by what does it make sense?
That's exactly what we're going to.
My version of sense is different to your version of sense.
No, it's very personal, but I think it's going to be answered as we move on through this. I guess it goes back to, in my opinion, your entry, your exit, and your money management. And you start off small and you build from that. And that's where I mentioned that, you know, for example, we're starting off with a C1, and that's your very first piece of the puzzle that you put together. And you need to make sure does your C1 make sense and make sense to your particular premise of your algorithm? And premise meaning, what particular edge are you trying to get out of the markets? For example, a trend following system. Is your C1, first and foremost, a trend following indicator, for example, and are the parameters that you have in your particular C1 indicator, are they getting the trend? So it goes back
common
to
sense. Common sense.
And it goes back to that qualitative, analysis and looking at the charts that we've harped on in a lot of the episodes so far, Judge. We need to go back and look at the charts, and we need to see, does it make sense? And making sense is in relation to what you're trying to get out of the market. So no nonsense Forex being a trend following system. And I think by the end of it, I think we can come back around, and then we can talk about this a little bit more. And so hopefully everybody will be able to understand what your trading strategy is trying to do and trying to solve. So, Judge, I'm gonna give it to you to kickstart off the build order. So particularly for no nonsense Forex, Judge, do you want to talk about build order?
So build order has been a topic that's been floating around for quite a while. In the Discord, we tended to get a lot of questions around what order to build your algorithm. And when we talk build order, we're talking about which parts, the specific parts and pieces of the algorithm. What is the best and most efficient way to put it together? And then, as always in a community, people were starting to ask, well, is there a right and a wrong way? Is there a good build order or a bad build order? And I usually want to always try and bring it back to how VP released the original series order. And because that comes back to that drip feeding premise and concept, where when he was releasing the content twice a week, you would have the podcast on the Monday, and he would have the actual meaty video on the Thursday generally. You'd sit back and you'd have a week to process what he'd said, and you'd have a week to go and test it and work it out and see if it fits. But then obviously you would lag behind, because sometimes, there's no time limit on these things. But the original build order when it came out kind of jumped around a little bit. And in some of his last videos, he did mention that some of the choices he had made on the order of release of the videos was sometimes a little bit driven around capturing the audience and making sure that he was building that audience still. So for people starting, it makes sense to follow VP's build order, his specific build order, and try and simulate the same thing as if you were listening to it on a week-by-week basis. However, once you've got to a point where you've built an algorithm before, or you've got through a whole bunch of back testing, then you don't necessarily, the most easiest example is if, let's say, you finished your first algorithm and you've used it as like a roughie, and you just want to, you just thought you'd just test it and it was pretty average, and now you wanted to go back and redo it and create a new algorithm. There's obviously a whole bunch of stuff you've learnt along the way, and you don't need to go back and redo it all in the exact same order, because there is an element of wisdom that you're going to pick up, and that comes from experience. And there's obviously going to be statistics and results and things you can use that you didn't have when you first started that you're able to build on top of. So it makes sense that when you go back and do it a second time, you're not going to need to start over and then, start testing C1s all over again. So obviously the order's perception changes after you've learned. Just the same as when we released the Discord build order. What we thought was the build order after the series had completed, which again was slightly different. And then for a while we were propagating the two different orders. And then I sat back and I thought, well, why does order even matter? It probably doesn't. What matters, obviously, there are certain parts, and this comes back to what Dillon was saying around it needs to make sense. You've got to have an entry, you've got to have an exit, and you've got to have a specific type of money management. And they're the three semi-parts to this algorithm or to any trading strategy. And those special parts, I suppose, of the no-nonsense Forex algorithm, in my opinion, again, this is basically my opinion and from my experience of building algorithms, you're going to need to have a base order or a blueprint or a checklist of things that you've already done before you move on to the next step. In my opinion, the parts are obviously you're going to have the confirmation indicator first, and then you're going to at least have all the next filtering indicators after that. And then you look at adding additional entries like the baseline entry. And then you make sure, obviously, you have your nuances last, because they're added as a needs basis. And then you check your news avoidance and your exposure control and your EVZ filtering and any other custom nuances. And as for exits can be thrown in anywhere there. It's more about metrics and making sure that you're measuring the right things. Now, I've just slapped that all together and banged it all out there for you all to know. But the key thing to understand about that order is it's got to make sense. For example, you're not going to test nuances before you've already done, your baseline type stuff. Because why? Why would you add nuances so early in your algorithm development process and then add a key piece after it, like baseline, and then have to go back and check to see if that nuance is affected, or you're basically doubling up, and you don't want to do that. So as the main key, I don't know what to call them, maybe call them milestones in building, is you're going to have your C1, and then you're going to have your filtering indicators, then you're going to add your baseline, and then you're going to add nuances, and then you'll test news, other things like exposure and EVZ, and then and somewhere in there you can add exits as you go. That's pretty much my premise for building. And what are your thoughts, Dillon?
I agree with that, Judge. And it goes back to what is a trading strategy and what is the meaning of your trading strategy and how to develop it. And you're absolutely right. It goes from a basic premise of entry, exit, money management, making sure you have those in place, and then building from that, adding in your additional filters like your C2, your volume indicator, even your baseline. Once you have that, then you can add in additional triggers, which are your baseline trigger, for example, and then adding in your nuances. And your nuances can be no-nonsense Forex nuances or nuances that you find and develop yourself. Now, remember, and we spoke about this in the last episode, nuances are meant to be exactly that, and they're not meant to be, I guess, like rules, I suppose, that really fundamentally change your trading strategy. And we'll talk about this a little bit more moving forward. But I just want to say, from my perspective, I do agree. I think that if you're using your C1 indicator as an exit indicator, then you can do that and then do your other filters, and then at the end find an exit indicator that might get you out a little bit earlier, and that might help with your metrics, for example. But if you aren't using your C1 indicator in your trading strategy, that's when I would do like a C1, then an exit, and then find the others, because it goes back to the basic principles of a strategy. What is your entry, what is your exit, and what is your money management? So you want to have those at least ticked off first, in my opinion, at the start, and then build from that. And when I mention, and I think I mentioned this before, but when I mention money management, having a 1 times ATR and 1.5 times ATR stop loss, that is a very basic money management. And if you're just doing a static take profit and stop loss without a trailing stop loss, without putting on 2 trades, both with half position size, that's more advanced. That comes later. At the start, and of course, if you've been following No Nonsense Forex, you would know that at the start, if we're just collecting win rate, and you would only have a static take profit and stop loss just at 1 times ATR and 1.5 times ATR, respectively. Now, that is a basic money management, and you can start off with that, and then of course build on your algorithm, and then do more advanced money management, like putting in the second trade, putting in a trailing stop loss, and see how that performs moving forward. Now, we mentioned this in the last couple of episodes, but remember that you must be building on a strategy that is fundamentally sound, but also that works. Every step that you take and every additional component that you put on, for example, additional filters, even additional triggers with your baseline, or even nuances, they must be building on something that not only makes sense, but you must be building on something that works. And putting these additional filters on must be adding to your bottom line, must be adding to the metrics, but also you need to be doing that qualitative approach as well. And you must be going back in the charts and making sure that it does make sense, and making sure that it is still going with the underlying premise of your trading strategy, which for No Nonsense Forex, again, is trend following. Are you catching those trends? And, when you put in the additional money management, are you getting those big trends? Does your trading strategy capture those? Because that's the edge you're trying to take out of the market. So for myself, personally, in terms of build order, I use my C1 indicator as an exit, so I don't really need to look at exit indicators until later on. But I personally do incorporate a little bit more of an advanced money management at the start, and that's just not a static take profit and stop loss. I do like to measure and try to capture the trends early on and then build from that, and that's just how I do it personally. So I don't actually have a 1 times ATR take profit. I actually leave it up to my entries and exits, but only have a 1.5 ATR stop loss just to measure my position size. So that's how I do that, because then that way moving forward, I can try to filter out some of the choppy scenarios. For example, that's why the volume indicator comes in, and then I can measure both profit factor as well as win rate, because I do have that money management and I am taking entries and exits respectively without a static take profit. That's just how I do it personally, and I guess that's a little bit more of I wouldn't say advanced, but a different take on it compared to, I suppose, the No Nonsense Forex and what VP outlines as well. That's just my take, but it goes back to what Judge mentioned at the start. There is the No Nonsense Forex way, but once you get into it a little bit more, you can really take your own journey along your trading strategy development, but you just need to make sure that what you're building fits with an underlying premise of your trading strategy. It goes back to, does it make sense? But what are you trying to do? Are you trying to capture the trends? Does your trading strategy capture those trends? Does your indicators in this combination capture those trends appropriately? If you go back and look at the charts, is this combination of indicators put together capturing those trends? And that's what it means by making sense.
I totally 100% agree with what Dillon is doing. He understands his algorithm, he understands the premise, he understands the concept, he knows what he's doing or what he's trying to capture from an edge perspective when he's building. So he has deviated from what would be considered the normal VP build order. And that's okay. And I think that's where I suppose I was vague in what I was talking about earlier, in that the build order doesn't matter so much. It's your consistency and having it make sense. And by make sense, it means think about what you're testing. Think about what you're trying to do in those bite-sized pieces we were talking about before. So if, for example, you've got a C1 and you're trying to filter out, we'll use volume as an example, you're trying to filter out the choppy periods, right? Then obviously it makes sense. If you've got a lot of flat and false signals in your C1 and you're looking at the chart and it seems to be happening all the time in the low volume periods, then it makes sense. Test your volume next. That's the next piece that I would test. Is looking at it, I'm looking at it going, okay, well, I need to filter that straight away because it's happening, quite prevalently and it's affecting the win rate. Whereas if you've got a C1 that's a lot slower, you might have a lot less signals. So you might not need to go on to volume next. You could potentially just go straight to an exit and start measuring ROI and profit factor, etc., and then trying to improve on that as the base premise for it. So to answer the question in general, there is no correct build order. There is a correct guideline in that it makes sense you're going to test your C1 first. It makes sense that baseline is probably going to come a little bit later because it is still filtering the C1 and it's a bias at the end of the day. And then you add your nuances at the end because you wouldn't add nuances before adding a piece. And as Dillon also mentioned, nuances, they don't happen that often, specifically because you've noticed something with your own algorithm and how it's behaving with the main purpose. It wouldn't be a nuance if you made it a rule at the end of the day. Then it would be a rule, a custom rule. And so there's obviously a difference between the two. The other things to remember, what actually does matter when it comes to build order? Because we're talking about this and saying, well, build order doesn't really matter too much as long as you're following the guideline. But what does matter is whenever you think of an idea, that you're always testing it and comparing it with your last best test, which is what I call a benchmark. And this is going to be a segue into what the benchmark 5 pairs are. But essentially, you're testing your indicators, you're testing your C1s at the start, you're looking to compare it to the last best test that you had, and then you move forward. You're always aiming to improve on your last previous benchmark. And it goes without saying that when you're doing this, you just need to make sure that every single test is apples for apples or like for like. And if you're not familiar with that term, apples for apples, it means just make sure you're comparing the same thing. So if you were, for example, comparing C1 indicators, make sure you're comparing them on the same time frame. And the same, so say if you're testing between 2016 and 2019, make sure you're using the same data between the two. It has to be a like-for-like environment when you're doing your tests, and then that way when you're comparing your benchmarks, so your previously best results, it is like-for-like and you're getting clean comparisons. Now, I know people are probably rolling their eyes. Well, that obviously, that makes sense. Of course you would do that, but you'd be surprised. People out there which aren't doing that. They're not doing that on purpose, but they might start testing, for example, last month, and they'll test a bunch of indicators and they'll test it manually. And then they'll find a tool, or they'll move to Soft4FX, for example, and then they'll try a different broker or a different bunch of data, and then they'll test another bunch of indicators and they'll record those results. And then they'll come into the Discord with 2 sets of results, and then they will go and have a look at someone else's results and go, that indicator had a really, really high win rate. I think I'm going to go and test that. And it looks like they tested it on this different broker. So I'm going to go test that broker too. Or I'm going to go test that tool, that automated back testing tool. I'm going to use that tool, and then I'm going to take those results and see what they say. And now you've got a whole bunch of results. And so your benchmark's all over the place. And it's not comparable because you don't remember how you tested them or what you tested. And then sometimes some people are using the chalks rule. It's not even a rule. I don't want to dignify it, but they'll use chalks in one test and then they won't use chalks in the other test. You just need to keep it consistent. And when it comes to build order, when you move on to the next piece of your algorithm, whatever it is, whether it be volume or whether it be your second confirmation indicator, you need to keep the actual testing consistent and make sure that that environment and the test periods, etc., are all the same all the way through. So for me, for example, I have a giant spreadsheet full of results. Like, it's huge. We're talking a lot of lines of all different results, of all different things, and of all different iterations and ideas. But they're all built on the exact same time frame, the exact same broker, the exact same data, the exact same benchmark pairs before moving on to the full 28. Keep it consistent. Think of the idea first qualitatively. Make sure it makes sense. For example, if your volume, you're obviously looking to filter out flat periods and low volume periods, and then test it, and then compare it to your last benchmark, which leads us, I think, into benchmark 5 pairs. Dillon, if you had anything to add on the consistency part there?
Yeah, I might. I'll give you a quick break because before you jump into benchmark 5, Judge, I just quickly want to mention when it comes to algo development, particularly the term algo or algorithm. A lot of people do think about it as quantitative. The term quantitative and quant trader, they trade these algorithms. We've been harping on and going back to this whole thing about, does it make sense? Are you doing your qualitative analysis? And we've mentioned this before, qualitative analysis, which is just going back and looking at the charts and building an understanding of what your trading algorithm is trying to do. We've been harping on this for the last couple of episodes, and that's because having an understanding of what your trading algorithm does and having a qualitative approach to trading is so much more important than the numbers and the statistics, because this is where it really comes to light, and that is when you are developing a trading strategy. Now, there's nothing stopping you from, developing any trading strategy that you want, or even taking the no-nonsense Forex trading strategy and adding your own twist to it. Probably seen a couple of people, they use 2 volume indicators, or they use 2 exit indicators, or, an altered money management. Now, why are they doing it? And we've gotten the question, is this okay to be doing it? And we answered that question last week when somebody asked, are we okay to use 2 volume indicators? And the answer was yes, if it makes sense and if it works. And there is nothing stopping you from really making this trading strategy your own and putting your own twist to it, as long as you understand what the trading strategy is trying to do, and as long as you understand what is the edge that you're trying to get, and adding on this new specific rule or nuance, as long as it makes sense and it fits within the underlying premise of your trading strategy. That's really what's important, because once you understand that, there's nothing stopping you from developing your own trading strategies, or developing your own money management, or even adjusting your entries or your exits and whatnot, because you have this fundamental understanding of how trading works and how, what is an edge. And then you really hone in and understand, what it actually means to be trading the market. And that's like very, very high level. Once you build an appreciation for, what trading is from a qualitative aspect, you can really do whatever you want. And I think that's so empowering. The best traders in the world, they all fundamentally understand how to trade and what trading is, and that's at the very, very top of importance in my opinion.
Yeah,
so,
mate, your opinion is spot on. Like, we harp on it. We harp on it so much, and I hate to say that we're harping on it again, but we are, because let's face it, these questions, they come up in very different ways in the Discord, but they all come back to the same thing. They all come back to the same thing. I've said that twice on purpose. It's that, for example, if someone goes, am I curve fitting? Well, what is curve fitting? How does curve fitting happen? Why am I losing? This all comes back to, why are you asking in the Discord? Why don't you ask yourself and find the answer? And we don't mean this as in, go soul searching. We mean like what we're talking about. When you want to see if something is making sense, then what you should be doing is saying, okay, why am I losing? Why is this happening? Get to the bottom of why it's happening, and then out of nowhere, you'll have an idea for a nuance. I mean, that's how, ultimately, I believe, how the one candle rule happened with volume, because he looked at it and went, well, why am I missing these trends? That's the make sense part. That's the purpose. Why am I missing my purpose here? Oh, crap, the volume indicator's lagging. Okay, how do I fix that? Well, how about I try doing, just waiting one candle for it to catch up? Let's see if that works. That's how you get to ideas. It's not looking at statistics. And look, I love quant stuff. I really do. A lot of people think that I don't, and I use it a lot. By definition, I use statistics a lot, but I use them in balance with the actual observation of the idea and looking at the charts. And you use it to measure. It's a tool at the end of the day. Now, I'm not saying there's something wrong with people that only use statistics, because that's not the case at all. But the underlying premise that Dillon has been saying, that I've been saying this whole time, is you must always look at the purpose. And the same thing happens when it comes to build order. You look at the purpose of what you're trying to accomplish. And if for some reason it's not working, find out why. Ask yourself that question. Give yourself the permission to say, okay, well, this didn't work. Let's not give up. Let's just figure out why it's not working, because, if I can't get it working, that's okay, because I'm actually learning. I'm getting experience, and I'll use that experience somewhere in the future to be a better trader. And so many people approach this and they think, I've got to get the best statistic, I've got to get the best win rate, I've got to get the best ROI. And then the next thing they do when they think they've got the best is they come into the Discord and they say, what's your ROI so I can compare it? It's the one thing that doesn't actually matter, because you don't need validation for it to be good. You don't need someone else to tell you if your algorithm is good or bad. What you need is you need to make sure it's working according to what you're building and the purpose that you're building, and that it makes sense. And what makes sense for you may not make sense for someone else, and that's okay. It's completely okay. Just don't get stuck in the trap of the statistics, because what ends up happening then, you can err and kind of deviate and end up curve fitting without really knowing it, or introducing no-nonsense Forex things into the algorithm, and then it doesn't work how it's meant to, and you're left there scratching your head wondering why. And it's because you've done something different and you don't know why it's not working.
I think we've spoken a lot about build order, and some of you might have wanted an answer, what's the appropriate build order? I think we mentioned somewhat it doesn't really matter as long as you're adding different components that make sense. Like there is, as Judge mentioned, your C1 comes first. That's a must because that's a trigger. You add in your filters, which are your C2, your volume, and then your baseline. Which order that comes in, it doesn't really matter. But then you add in your baseline trigger after that, and then your exits as well, and then your nuances. That's the proper order, and that's, in our opinion, is what makes sense in our eyes.
Or one deviation to this is if you're new to no nonsense Forex, the order should be watch VP's content.
Yes.
Like actually follow it through and build along with it. Try and simulate it as if he was releasing it on a week by week basis, like we all originally did. So, I was part of that crowd that was waiting for the video every single week and testing while I was waiting for that video. That's what you want to simulate. You can fast forward that, and you at the end of the day, it's kind of like Netflix, isn't it? Like back in the old days, we used to have to wait the full week for the next episode on normal TV, but now we just binge the whole entire lot and we take it for granted. Put some controls in there, you don't want to miss stuff. I mean, you can miss stuff on Netflix, but you don't want to miss stuff with this. So you can go as fast or slow as you want, but the idea behind it is you will pick up experience. And I know VP did a video on experience and how important experience is. The whole idea of the build order, in my opinion, from the very, very beginning, is build in the order which makes sense so that you can learn. Because when you eventually get to the point where you've built a couple of algorithms and you've noticed a few things, there's so much stuff in this whole no-nonsense Forex way of doing things, which, it can't be mapped out. I think a lot of people need to try and fit it into a mold, like it needs to have a blueprint, it needs to have a checklist, and that's great if, you're a quant-based person who, is very logical and likes to follow a plan or a path. Then, map yourself out some plans and a path. But what we're saying is there is no one's going to hand down to you a way to do this, right? Because at the end of the day, it's a learning experience. You're building something. This will probably be a closing thought, but, when you're building a house, and this is an analogy, when you're building a house, there's certain things you do in order, right? You will always put the foundations down first. Then you will build the walls before you build the roof, because it makes sense. You can't build the roof first, unless obviously you're going to airlift it on top. But essentially, you put the walls in before you put the roof in. And then you put the windows in last, kind of the glass last, and you put the finishings on it. And an algorithm is exactly the same thing. You're going to do specific parts after you've done other parts first, which form its foundation. Just like a house, put the foundations in, you put the walls in, you put the roof in, and then you put the finishing touches on it, and then you build on it from there, and then later on you may renovate it. But that's exactly what happens with an algorithm. But yeah, just remember that analogy. It's like building a house. There are big parts that need to happen in order, and the other stuff is insignificant because it doesn't matter. At the end of the day, you'll have a finished house.
I'm yet to see a house with just a roof that floats in the air, just like I'm yet to see, I guess, an algorithm that doesn't make sense either. make a floating house with a roof. That doesn't make sense. So same thing, absolutely right. Your foundation and your structures.
The roof's the baseline, mate.
Yeah.
The roof is the baseline.
That doesn't make sense. But beautiful analogy. Your foundation and your structure, that's what's important. So that's some fruit for thought for everybody. If there is anything that we have missed or you want clarity on, then of course feel free to shoot us a question in the comment section, or if you are watching this live, of course, you do have the opportunity to ask us a question in the Discord, which is of course really, really good. Judge, you spoke a little bit to the Benchmark 5. Did you want to talk about the Benchmark 5 quickly and maybe add to what you've already started to discuss on?
So we all know what the Benchmark 5 is, and just for people that still learning and don't actually know what we're referring to, VP in his wisdom, somewhere along the way, I can't remember now, in the series, revealed that there are a bunch of charts which he uses, 5 specifically, to do his testing on, usually to test ideas to start with. And they're basically 5 pairs which he uses to test on first before testing all 28 effectively. Because obviously it's not very efficient if you are testing all your C1 indicators, for example, on all 28 pairs before you move on to the next indicator. It's just not time efficient. So he chose the 5 pairs. I believe they're Euro USD, Aussie CAD, Swiss yen, Oz New Zealand, and Euro pound. They're the 5. Is that correct, Dillon? I think they're the 5.
I think you are correct.
I'm pretty sure they're the 5. I'm rambling off the top of my head. I see them all the time. I do use the 5, but I extend that to 11. The reason I extend that to 11, where I actually add all the USD pairs, as I'll get to in a minute. But basically the 5 which he uses is basically a spread of currencies and pairs, which basically capture the general momentum of the whole entire market, because it consists of every single currency every single major currency, I should say, that's in what we trade. And generally when you're testing, they're the currencies which he's found capture every type of movement of the market. Now, every other currency other than that is not inferior to those 5. It's just the 5 that he's chosen to cover all the characteristics of the market so that you can do a quick test on it. And generally, the results of those 5 pairs on whatever you're testing, whether it be a nuance or an indicator or whatever, the results on those 5 will generally correlate to a test that included all 28. That's the premise of it. Can you test the 5 and get vastly different results on all the 28? Yes, you can. But it's rarer. It's a probability thing. I believe in the backtest competition, one of the finalists actually had a really, really strong benchmark result. And then when we ended up running through the 28, he fell behind. But that doesn't happen very often if you've built the no-nonsense Forex way and you've built a fairly broad and robust algorithm. So that's what the Benchmark 5 are. I use 11. And again, I have a purpose behind it. It makes sense to me to use those 11. You don't have to use 11. I use 11 because I wanted to use more pairs that cover more of the volume of the market. So essentially, I use the Benchmark 5, and then I add in every other USD pair. And people will be saying, well, why do you add in the USD stuff? Because it's highly manipulated. Well, you're right, it is. But it also consists, like the USD currency is used everywhere. So if there's going to be a move, and, if it's going to be a trend and it's going to be impacting one of those USD pairs a lot of the time, like the move of the currency, whatever it is. And this goes back to VP's premise of, who's driving the bus. If you haven't seen that podcast episode, I think it's a podcast episode, go watch it again about driving the bus, because it's really describing, how they move and how one currency is actually in control of a trend. Or the cause of a trend. Generally, there's one that's more dominant than the other. So essentially, I use 11. I also use 11 because I automate everything. So if you're automating, then use more. You don't just use 5, because you've got the ability to use so much more. So I use 11, which consists of those benchmark 5 and all the other USD pairs, and I basically build off that, and that forms my benchmarks. And I compare everything, through a certain time period on the benchmarks of those 11. And then once I'm happy with the results after testing an idea, I will then move on to the remainder and test all 28. And then essentially what you'll have, for example, I was building a fresh algorithm, I'd be testing all the different pieces and the parts on the 11. And then when I was happy with it, I would test all through to the 28. And then I'd get the next idea, the next piece, and then I drop back to the 11 again. And essentially my benchmark test of my 11 will correlate to the 28 test. So once I have a finished algorithm, for example, say it was version 1 of my algorithm, I would have tested it on 11, I would have tested it on 28, or in your case, you may have tested it on 5, and you've tested it on 28, and then you move on to forward testing, for example. And then from there, as you build on that algorithm as you go, you would start testing on 11 again. 5, the benchmark 5 again. So let's say you had an idea or a nuance, you tested on those 5, and you'd compare it to the 5 benchmark that you had previously, because you know that the previous 5 benchmark correlates to the 28. So if you're getting improvement on your following tests, then you know it's likely, and I'm not saying it will, but it's likely that that will also flow through to the other 28, because your original correlated with each other. So that is the purpose of the benchmark 5. It's just meant to be a shortcut. Actually, I'm not going to say the word shortcut. I've said it, but more of a shorthand version of testing, so that you can do it a little bit quicker and identify results. VP did give a checklist of how he approaches testing, how he looks at the purpose first, and then he tests it. But he tests it against the 5, and then he compares it to the previous test of 5. And that's essentially what it's used for. There are people out there who are using it only, and they're not testing the 28. And I just wanted to remind everyone that VP did say, before you move on to trading anything, make sure you have tested it on all 28 first. And that is it. End of chat. Have you got anything to add there, Dillon?
No, you're very right, Judge, and VP is as well. If you're going to be trading all 28 pairs or any combination of pairs, make sure before you go out and before you even forward test it, make sure you are back testing it to the combination of pairs that you will be trading with in the future. So if you are going to be trading 28 pairs, then you do, and you should back test your trading strategy on those 28 pairs. So I was going to mention, and Judge, you mentioned as well, you take an automated approach. I do as well, and that's why I don't use the benchmark 5. I did in the past when I was just starting out, but now that I have taken an automated approach to trading, I can backtest all 28 pairs very, very quickly. If you are doing an automated approach, you can do, as Judge mentioned, 11. Or if you're doing a manual approach, then this benchmark 5 would be, of course, beneficial. And the reasoning behind it, of course, is, as Judge mentioned, to help streamline things a little bit, because, of course, you don't want to be stuck there testing your C1 indicator on all 28 pairs. It's probably very, very time consuming, I'm sure. But also the reasoning behind the benchmark 5 is because they are a diverse basket of currency pairs that are particularly uncorrelated. So just to confirm, I did look it up. It is the Euro USD, the Aussie Kiwi, the Euro Pound, the Aussie CAD, and then the Swiss Japanese Yen. And I think that's what you said. You got it right? Yeah. I'm going to go back and check that, Judge. I think you did.
I've done it that many times. So yeah.
No, that's it. So I think, Judge, is there anything you want to add?
Nah, that's pretty much it. I think everyone understands and uses it in the right way. It's just guard against any thoughts of I'm just going to shortcut and only test the 5. Just be thorough. be thorough with your testing, always have a purpose, and always be consistent. I think I've done far more tests on the benchmark 5, or my benchmark 11, I should say, than I have the 28. And why? Because I had a really good starting 28 and 11 that I compared together, and they correlated well together. So every other test moving forward, if I come up with an idea, I'll test it on that 11, and I'll see how it compares to my last best benchmark. And essentially, in that way, or ironically and coincidentally, the benchmark 5 will, or whatever you use for your benchmark, will end up being a filter for your ideas, because it certainly is for me. Like, I come up with an idea, or someone will share an indicator with me, or I'll think of a nuance, and I'll test it on just that 11. And if it makes an improvement, I will generally do a couple of other side tests around it just to make sure that it was actually an improvement. Like, I'll try some out of sample data or whatever it may be, depending on what I'm testing. And then I'll adopt it straight away. But at the same time, the benchmark pairs that I use have been a really good filter as well for bad things. So, I'll add an indicator, I'll play around with it, and I'll test it on those benchmarks. And if they don't work for some reason, then I will find out, firstly, why it didn't work. So I'll look at the chart. So I'll still debrief myself qualitatively. If something doesn't work, then I'll find out why it doesn't work, and then I'll move on. And by doing that qualitative debrief, sometimes I'll find something else and I go, oh, actually, that's the way I can make it work, or that actually works well with this other indicator, so I'll add a different indicator. And so you end up coming up with ideas, and at least you're not needing to test the full 28. You're just testing that small subset, but it is still meaningful because you did it right to start with, and your original benchmark is still there to compare it to. So that's it for benchmark 5, I think. Unless people have questions. And I mean, some of the questions that we've been having are quite lagging. So we're still getting questions through about confirmation indicators and sometimes volume, and that's okay. Maybe we could jump through a few of these. What do you think, Dillon?
Yeah, we can, because I think, as I mentioned before, we got a couple of really, really good and detailed questions in regard to build order, which came from in the past. But I guess that was the basis of this entire episode of this podcast was based on those questions that did come in terms of build order. I haven't seen any new questions. I just want to say I haven't seen any new questions come through because I think we answered those the questions that did come through in the past in this episode. But in terms of new questions in relation to into build order, I haven't seen anything yet. So Judge, if you wanted to, or if you've got a couple of questions in relation to some of the past episodes, happy to answer those ones here.
I don't have any lined up. I was just looking through the channels and seeing that there's still quite a few coming through about like confirmation indicators specifically. But that's okay. Some of them are a little bit nuanced, and I've tried to answer them in the channels themselves.
Oh, yeah, I've seen you in there. Yeah.
Yeah, but other than that, I think build order. Obviously, the build order questions came quite early in the piece, which is why we've done an episode on it here, and also to break up the whole going through indicator by indicator piece. We wanted to do something a little bit different with this episode and talk a little bit more around purpose and strategy building in general. So without further ado, I think, if there's no real questions and no one's really jumping out and asking any questions, that could be a good or a bad thing, whatever. I think we'll wrap it up.
Closing up. So with all that being said, thank you again, Judge, and thank you everybody, especially all of you that have tuned in live. Really appreciate all of you for sticking around and listening to us talk for us very early in the morning in Australia, but wherever you're tuning in around the world, greatly appreciate it. And as always, it's been a lot of fun. So super appreciate all of you for tuning in today, and we'll see you in the next episode.
Cheers.